So our last option is something new. क्या है? एक नई पॉलिसी टूल अंडर कंस्ट्रक्शन है जो कि ईयू को लेजिस्लेटिव पावर देगी ऐसी सिचुएशंस को हैंडल करने के लिए। क्या होगा, कैसा होगा, जब वो ऑफिशियली आउट होगा तो मैं उस पर भी एक वीडियो बनाऊंगा। एंड तक देखने के लिए शुक्रिया।
If you are unaware of this issue, first watch the video that I made a few weeks back. You will understand three things. First, what is the issue basically? Second, how did Italy end up in a sovereign debt crisis? And third, why ECB had to come up with a new tool. Now, I am presuming that you have watched that video, so let us explore what this new tool is all about. Transmission Protection Instrument, TPI, the new gun in town. What is TPI? TPI is basically a tool that gives ECB the legislative power to buy unlimited amounts of bonds of any country that it judges to be suffering from a debt crisis and increasing amount of borrowing costs. By creating this tool, the ECB has solved a key vulnerability that was haunting the Eurozone ever since the 2010 debt crisis that had almost ripped the euro apart. The idea behind creating this tool is to keep the borrowing cost of member states in check. Right now, the borrowing cost of nations like Greece and Italy are at record highs. Not to forget the kind of energy crisis that they are facing, as Russia keeps the Nord Stream pipeline partially shut.
Now let's look at some major highlights of this tool. First, it will primarily help the ECB buy government bonds of member states with maturities between 1 to 10 years of any country, quote unquote, experiencing a deterioration in its financing conditions. In plain English, it means any country which is facing the problem of first, rising debt, and second, paying interest on their existing debt. Basically, a country that is on the verge of default. Second, as part of this tool, the ECB could also consider purchasing private sector securities, quote unquote, if appropriate. So, private players with a lot of debt would be more than happy right now. Third, the size of these purchases will, quote unquote, depend on the severity of the risks and not any pre-agreed limit, which in plain English again means there can be unlimited bond buying. Sky's the limit kind of thing. The main question still unanswered. Where will the money come from to purchase sovereign debt? If you read the report, you will be surprised to know that there has been no mention whatsoever as to how these bond purchases will be financed. The ECB claimed any bond purchases made under the scheme would not increase its balance sheet. But there was no clarity on how else the money would come if not by increasing the balance sheet. If you are unable to catch up with what I am saying here, let me break it down for you.
National debt is what? It is the value of the bonds which the government issued to raise money. Let's say I am the government of Italy. I issued a bond. Someone must have purchased that bond. That's how I raised money, right? Now, when that bond matures, I am liable to pay my bondholder the principal amount plus the interest amount. And if I can't, that simply implies I am on the verge of default. To solve this national debt problem, ECB needs to purchase those bonds of countries that are on the verge of default. And to purchase a bond, you need money. Money comes from either, I'm saying from a central bank's perspective, selling what you already have, that is your assets, or
it can be printed. But the problem with printing is your balance sheet increases, and this fuels inflation, which the ECB cannot really afford to do right now.
But as I said, they have mentioned that any bond purchases made under this scheme would not increase its balance sheet. So exactly how they are going to arrange the money to purchase Italy's debt bonds under this new scheme TPI is still a question. Now, is this a matter of credibility? Many analysts and economists are now presuming that the ECB itself doesn't know what to do, and TPI is just a fancy tool to keep the bond market calm. With inflation reaching record highs, the pressure has been increasing on the European Central Bank to save its image and people's confidence in the very institution.
Inflation is too high. It is hurting people, especially the underprivileged. That is why we have decided to raise interest rates. It is the first rate hike in 11 years, and so it is a very important step. Our actions tell the public, companies, workers, investors, that inflation will definitely return to our 2% target over the medium term.
Thus, taming inflation is becoming more of a credibility issue now for the ECB.
There should be no doubt that we are committed to maintaining price stability and returning inflation to 2% in the medium term. That's our job, and we will deliver.